Hi, everybody. Just catching up quickly. If you're in my winter investment course, just want to let you know I did post an announcement today where I created a video to help you with Chapter 8 homework, suggestions on how to improve and perform better on the homework, and also that we're in the middle of Test 2, which completes today on Chapters 6, 7, 8, so make sure that you complete that today. Now, during this period of this class, it's a short class, it's only 3 weeks, and it's a pretty intense class, and most people have been doing very well, and I'm very impressed with the high level of quality of work of students. But we're in an interesting time right now because the stock market, a lot of things are happening with the stock market. So I thought I would just make a quick video to kind of describe what's happening. So in the past week or so, the Dow has dropped quite a bit. And on Friday, it dropped 390 points. So if you look at the Dow index, and we look at, say, a 5-day chart of the Dow index, you'll see that we went from, actually, let's expand that to 1 month. Okay, so we went from about 17,700, and can I move this over? Hold on. There we go. So we went to about 17,700 all the way down to 15,988. So that's a pretty big drop in a month. So what is causing this to happen? Now, this is, if you look at this, is the 50-day moving average and the 100-day moving average. Now, this is something we're going to talk about next chapter, or one of the chapters coming up on technical analysis. So if an index passes below the 50-day moving average, that's a sign to sell. And if it moves also below the 100-day moving average, that's even more immediate sign to sell. So technically, the market has moved below both its moving averages, which is a sign to get out of stocks because we're in a correction phase right now. So Yahoo Finance is a great area where I use to look up information about stocks, get stock quotes, get news. One of the big drivers behind, you may be asking, well, why is this happening? Why is the stock market going down if the U.S. economy is doing well and unemployment is so low? One of the driving factors is oil. The collapse of oil has gotten a lot of investors worried because there's a lot of money in loans that were lent to these oil companies in the United States from banks and investment banks especially. So investment banks playing the game of lending money, then collateralizing debt and securitizing debt has created another bubble in lending inside of the oil industry. So they're worried about a repeat financial contagion similar to the real estate market in 2008, although not as worrisome and not as big, but that's sort of a concern why, oil prices going lower, people would normally think, well, that's good for the economy. I have more money in my pocket and paying less for energy, so I can buy more things, and companies are paying less for energy, so their costs are going lower, like airlines and transportation companies. And that is true, except Wall Street's more worried about the financial impact of all these possible oil companies going bankrupt. Additionally, the earnings for the week are coming in a little sour. So this is the earnings period where a lot of companies release earnings reports, and some of the earnings reports are not terrific, and that's scaring off investors out of the market. So we have these twin forces of earnings being weaker, oil devaluing, and also, of course, you add in the mix a volatile Chinese stock market and a slowing Chinese economy. In addition to probably the most important factor, the Federal Reserve starting to raise interest rates. And there's a saying on Wall Street called "Don't fight the Fed," which means if the Fed is tightening money supply, get out of stocks because you're not going to win against the Fed. So there's a philosophy: you want to be in stocks when the Fed is lowering interest rates, but you want to be out of stocks when the Fed is raising interest rates, which they are doing now. So these are some of the elements that are creating this storm on Wall Street. But this is a good thing for the class because there's a lot of attention and a lot of focus now on stocks, which could help you apply some of the stuff we're learning in class, specifically when we get to the technical analysis chapter. Now, some ways that you can learn more about the stock market, which are, there's a show on CNBC called Fast Money. And you can also go to the website for Fast Money. Just type in Fast Money CNBC on your internet browser, and they'll have videos of highlights of their show and some information about the people on the show that are talking and different stocks you could invest in. And earnings next week. Netflix is coming up with earnings this week. It's going to be a very important barometer to look at. So this is a show that I would recommend if you're interested in stocks and you're interested in what's happening in the stock market. It's a daily show on CNBC, which is a really good show to watch. Also, a show that might be interesting that I think some people probably know about is called Mad Money with Jim Cramer. And again, this is a show that talks about stocks, reviews what's happened for the day. He'll bring up a lot of recommendations and talk about a lot of stocks that he would say are interesting to invest in or maybe you should stay away from. So it's an hour-long show, but it's very comprehensive about what's happening in the stock market and talking about individual stocks. And it's a great way for new investors who are interested in the stock market to kind of get experience and start knowing about the different stocks and getting Jim Cramer's ideas about what's happening in the stock market. So those would be some suggestions for you about how to learn more about what's happening in the real world with the stock market. Those two shows, which are in the sort of the afternoon, early evening on CNBC, are a great way to become more knowledgeable of what's happening in the stock market, more understanding about why certain stocks are moving in certain directions. And Jim Cramer and Fast Money, they do a lot of talk on technical analysis as well, looking at 52-week highs and lows and market trends and charts. So it's a good reinforcement also when we start talking about behavioral or technical analysis in this class. So these are a couple things you can do to learn more about the stock market. But overall, I mean, with a stock market that's, Yahoo Finance usually has they'll have some videos and some news stories about the stock market, and you can click on them. I'm going to pause that. So they're usually short and they're a pretty good way to look up and get some information about stocks. And here it explains a little bit more about oil and China and things like that. Interesting to read or watch these videos. Again, so that's a great way to kind of comprehend. I mean, you're learning about the basics of investments in the textbook and the homeworks in the class, but this is a way to apply that to the real world and kind of, if you spend an hour a day watching these videos or poking around on Yahoo Finance, it's a great way to understand more about what's happening in the market. And Yahoo Finance will give you an ability to create portfolios, market data on stocks, where you can go to market data and you can look up the stocks that gained the most, the stocks that lost the most active stocks, see some information on charts, currencies, bonds, so commodities, different things like that. You can also create your own portfolio inside of Yahoo Finance. And of course, you can just do quick lookups on stocks, which would give you an idea of where the stock price is at, where it's traded, the PE multiple. And the PE multiple of 71 is very high. And that's why one of the things that is driving this market lower is that stocks are valued. Some stocks are valued very highly. So the average PE multiple for most stocks should be around 15. So when you're getting to the highs of 71, and I'm seeing a lot of stocks over 50 PEs that are approaching 100. The last time I saw that was in 1999, right before the tech market crash that totally devalued and took down all of the stock market indexes. So these high PEs, which we learned about in class, can be troublesome, especially for a company like Adobe Systems here, has a very high PE. And I would look at the key statistics for Adobe Systems, and I would see that, the growth, they have a 20% growth in revenue, which is good, and 152% growth in earnings, which is really excellent. So I think that's what's driving the investor interest in the stock, because it's becoming a growth stock. But still, I don't think this company is worth 71 times earnings. However, what we'll see in the coming weeks is stocks that are very overvalued like this are going to start to be pulled down because their valuations are just a little insane, for what the stock is offering. And I think that's a big problem. I think a lot of the smart money has recognized this and pulled their money out and actually shorted some stocks to take advantage of this eventual correction or bear market. So anytime you have a long bull market, there is going to be a correction period and what the correction period does is it goes in and sees all the stocks that are really overvalued, and it punishes them and corrects them, puts them at the proper valuation, basically, and creates an efficient market again. Once the market becomes inefficient, like it has, this correction or bear market helps to make things more efficient. The problem is, generally in bear markets, it doesn't stop at the point where the stock is efficiently priced, it usually goes much lower than the efficient price. And then once we get a bounce back from the bear market, then we finally get to an equilibrium point, and that could take up to a year. So even though we're having these beginning stock market turmoil right now in January, this could extend to a full year or longer before it is completely done and over, and stocks are back to a more proper valuation, a more efficient market. Okay, so I hope you found this 10-minute video helpful about understanding the stock market and how to apply some real-world information and get closer to what's happening in the markets to apply to what we're learning in class. And I'll talk to you soon. Take care.